What's up everybody? Nate here. Well, it's official. As of February 24th, 2022, Russia invaded Ukraine and is now exercising a full-on war on the country in order to take it over. And ever since then, things have been completely crazy all throughout the world, from geopolitics to worldwide economies and markets. Things have even gotten so bad that Russian President Vladimir Putin has put his nuclear arsenal on high alert, signaling to Ukraine and the rest of the world that things could get a whole lot more serious. Not only that, but Russian markets and the Russian currency, the ruble, have dropped both to new record lows. And the stock market over here in the States is also completely tanking. So with all of these changes happening with the Russia-Ukraine crisis, I figured it would be good to have an update video to go over all of the crazy things that are happening right now. In addition, I want to talk about what could be coming next for the conflict and our worldwide economies in general. Because unfortunately, it doesn't look like this thing is going anywhere anytime soon. But before I break all of this down, do me a quick favor and smash that thumbs up button below and ring that notification bell too. Both of those two things are completely free and they help to show me that you like this video and that you want to see even more just like it. Thank you so much for doing that. Now let's talk all about what is happening with the Russia-Ukraine situation right now. So the first thing we need to talk about here is the actual war between Russia and Ukraine. Now Russia has sent forces all the way into Ukraine and is currently trying to take over the Ukrainian capital of Kyiv. Now, I'm obviously not in Ukraine, but according to reports from the Ukrainian government and reporters in the country, Russia has not been able to take the capital as of yet. In fact, it appears as if Russia actually might be losing this war. We are still very early on into this conflict, but Russian forces have not really been able to take nearly as much ground as they would have liked to against the Ukrainian defenses. This has led the Russian President Vladimir Putin to put his nuclear arsenal on high alert, which could potentially mean that this conflict might get escalated sometime soon. Now, I want to be clear here. It doesn't actually mean that he is ordering nuclear missiles or anything else to be sent into Ukraine. All it means is that he's basically telling his personnel to get ready for the possibility that that might need to happen. But right now, there is no indication that that is going to happen. There's still a lot of fighting between Russia and Ukraine right now, which is causing markets and economies pretty much all over the world to completely sink. In fact, the Russian stock market dropped by almost 40% after the United States and the rest of the world started imposing even harsher sanctions on the country. As of recording this video, the Russian stock market is closed. You can't even buy and sell assets right now because it's so heavily volatile. And the Russian government and economy can't afford any more money to be lost or taken elsewhere across the world. Now, the second thing we need to talk about here is all about Russian banks and the ruble. The ruble is basically like the Russian dollar. It's their form of currency, and right now it is completely tanking when you compare it to other currencies around the world. For instance, 108 rubles equal $1 US right now, meaning there is not a lot of confidence behind that currency because people just don't want it. They would rather exchange it for a ton of other currencies, which is why you're starting to see the value of the ruble drop significantly. That has led the central bank of Russia to raise its benchmark interest rates from 9.5% all the way up to 20%. For reference, the interest rates in the United States are currently at around 0% as per the Fed. They could go up by around 50 basis points sometime soon, but that wouldn't be anywhere near what the Russian bank just did to its own economy. It raised interest rates for the same reason that our Federal Reserve and central bank wants to raise interest rates in the United States. Lower demand and protect the currency. They don't want inflation getting way out of control because it's pretty clear that the value of the ruble is already extremely low. And if you allow people to spend a crazy amount of money or buy a crazy amount of things, then the value is going to go down even more. And in order to fund this conflict, the Russian government is going to have to print a lot more money, and that money is going to go towards its military and eventually back to its citizens. But they're not really going to be able to spend anything because the prices for everything in the Russian economy are going way up, even faster than in the United States. And remember, we are facing record high inflation right now here in the US. Like back in January 2022, inflation hit 7.5%. Inflation in Russia could soon be double that. And like I said, this is all due to the sanctions that the United States and other countries around the world have imposed on Russia at this time. They don't want the economy of Russia to grow right now because that means more money for the government and more money that the government can use to fund its conflict in Ukraine. Not only that, but they want the economy of Russia to suffer right now. It's all basically an incentive for Russia to end its conflict and pull its troops out of Ukraine and end this war. And things are getting a whole lot worse with Russia right now because countries around the world are starting to pull select banks out of the SWIFT system. SWIFT is basically the worldwide banking system. All of your major banks use it to confirm transactions and allow money to be sent all across the globe. It essentially connects to a government or a country, and then the government and country regulates it from there. However, if countries completely cut off Russia, well then money can't flow into those countries, and in turn, money can't flow out of Russia. That's what we're starting to see right now. Germany and the United States are calling for certain banks and financial institutions and oligarchs to be removed from the SWIFT system, at least temporarily. That way, no money can be sent overseas and no money can be sent out of Russia. Now, all of that sounds just really bad for Russia. Russia's economy right now is completely collapsing. And the further they go with this Ukraine conflict and possibly threaten other nations, the more sanctions will be imposed on them. Because right now, the United States and other countries are not even doing the complete maximum that they could be in order to crush Russia's economy. Now, all of that is from the Russia side. So now what exactly is happening with our stock market and our economy right now? Well, our stock market is not loving the Ukraine-Russia conflict. In fact, it has done nothing but drop continuously since all of this has started. I will say it did have a moment where it did recover some of its losses, but ever since then, it's just gone down. Now, the stock market doesn't like this because of all of the financial implications that this war has on businesses. Russia is a major export of a ton of things that we use in the United States all the time, from oil to certain metals and even wheat. Russia is kind of a powerhouse in a lot of industries. The United States then takes a ton of those resources and refines them to create products and services in our own country. If businesses have a hard time getting all of those raw materials, well then now you're going to create a scarcity situation, and we already have some pretty bad supply and demand issues in the US, meaning our inflation problems and supply and demand is only going to get worse in the United States. And that's the big fear, and it's actually not even a fear right now because it's a reality. I mentioned before in a previous video about how gas prices could potentially go up around 30 to 60 cents on average in the United States if Russia ultimately invades Ukraine. Well, that is completely a reality right now. I mean, me personally, I filled up my gas tank this morning and the price went from $3.29 a gallon all the way up to $3.55. And that's just in Michigan. In other places like California, the price per gallon of gas is well over $6 right now. That is a huge strain on Americans' budget, which means naturally they're going to buy less things, which is less profits and less revenue for your big corporations. All of those big companies trade on the New York Stock Exchange, so investors are pulling their money out because they're afraid of how bad things are going to get. They don't want to continue to lose money and lose money, so they're putting their money into other things that are going to protect them against inflation. One of those things happens to be gold, but some investors are actually just holding on to their money right now and kind of riding out this crisis. They want to see what's going to happen next. Not only that, but the United States government and governments across the world are upping their military spending. Now, the US not so much, but Germany in particular is upping the amount that it spends on its military because it's going to start funding Ukraine a little bit more. And of course, the United States is funding Ukraine right now, and they're sending troops over to the bordering nations of Ukraine in case things get out of control. President Joe Biden has said that the United States is not going to enter a war with Russia over Ukraine. However, if Russia decides that it wants to take other countries and invade other nations, especially the nations of NATO, well, the United States will have no choice. Because a part of being in NATO means that if one country wages a war on another and it happens to be in NATO, well, that means you basically have waged war on all of the nations, which include the UK, Germany, France, and the United States. Not to scare you, but that would basically mean World War III. I mean, literally. Except for this time, it might just be Russia against all of those nations I just mentioned. What that means from the financial sense, though, is the United States is pouring more money into the economies worldwide and less money into our own economy here. That involves money printing, and it means inflation is going to continue to go up. And there is a real scare right now that inflation could hit 10% on the next CPI report. And it looks like United States sanctions are only getting worse for Russia right now, because President Joe Biden is trying to hit the country where its money is. All of the Russian oligarchs and all of their assets are essentially on freeze right now. They're restraining travel and their money here. So all of the Russian billionaires and millionaires pretty much are stuck in Russia with a crashing economy and a crashing stock market and a currency that is continuing to lose value. Now that, coupled with the Ukraine army actually pushing back and defending its country extremely well right now, Russia and Ukraine are actually having negotiations over what's going to happen next with this war. On February 28th, 2022, representatives from Ukraine and Russia met at the border of Belarus to have a negotiation over what they are going to do and how they're going to end this war. Now, unfortunately, I don't have a lot of details over exactly what happened with that meeting, but it does show that there is some positivity. I mean, at this point, Russia is willing to talk, which is something they were not willing to do before. And Ukraine right now is trying to join the European Union, which doesn't really mean much in terms of the Russia-Ukraine conflict, but it does mean that Ukraine wants to align itself with Europe and the United States and not with Russia or any of its allies. So now, with all of that being said, let's break this down. What exactly does all of this mean for our economy and the war and markets in general? Well, let's start with that one. What this all means for markets. The stock market in the United States is super tricky. It's always been that way, and it relies on human beings buying and trading stocks. When you have people buying stocks, then you're going to have kind of an emotional connection to that stock because humans are naturally emotional. And that's not necessarily a bad thing. But when you have thousands, if not millions of investors all scared at the same time, well, then you're gonna see market crashes and market corrections. You have right now so much money being pulled from markets, and that's bad for everybody. That is most likely going to continue as the United States and nations across the world continue to put more and more sanctions on Russia. And of course, all of these big ups and down drops in the stock market are probably going to continue as long as this Russia-Ukraine war is going on. The reason being is because there's a risk that this could affect more than just Ukraine and Russia. Like I said, if Russia decides to invade nearby nations, that could not only mean a war, but it could mean even more sanctions. And it could mean that all of the products and goods and services that come out of those countries can no longer do so. So businesses are going to have an extremely hard time producing and creating more goods, with very little to buy in the United States and prices for everything continuing to go up. Inflation is going to go crazy. And we could see inflation like we saw back in the late 70s and early 1980s in the United States, which inflation at that time was around 14 to 15%. And that's on top of anything the Federal Reserve decides to do. Now, the Federal Reserve, like the Central Bank of Russia, is looking to raise interest rates. Now, the whole idea behind that was it wanted to lower demand because it saw our economy was starting to improve from the pandemic. If that's not the case anymore, then they can't really raise interest rates all that high because Americans are already super tightened on what they can buy and spend their money on. If they raise interest rates uncontrollably, then Americans are going to be able to buy even less things. That means every asset market and every market and industry in the United States is going to collapse, which means our economy is going to take a hit too, because the only way things grow and are successful in the United States is if people are spending money. That can't happen if prices are through the roof and there's just nothing to buy in our economy because supply chains are stretched even further. For markets around the world, it's going to be a similar situation. Minus, of course, Russia's, it's going to continue to collapse even further because its currency and assets are all becoming less valuable. That's not necessarily happening in the United States. I mean, you're seeing individual stocks fall, but that's just because they hold such a big part of the market in general. If you see a company like Amazon start to drop in stock, well, it's not because the company's fundamentals are bad or it's making bad business decisions. It's only because investors are pulling their money out of the stock market in large. That really has nothing nothing to do with Amazon or other companies. It all has to do with geopolitics and worldwide economies, which actually allows a lot of investors who couldn't normally afford those big name stocks like Apple and Amazon to now swoop in and buy those stocks at a discount. Because remember, there's really nothing wrong with those assets in the first place. It's all because of what's happening across the world. That's why after Russia initially invaded Ukraine, you saw a pretty significant stock drop. But then the very next day, you saw the stock market go way back up. This is because investors wanted to jump in and buy those assets while they were at a super low price. That's probably going to continue to happen for all assets all throughout the world. Like I said, look for a lot of markets in the US that have been on fire for the last 2 years to suddenly start coming down. Because if inflation continues to go up, that's going to hit Americans in the wallet, which means they're not going to have much money to buy or save for just about anything. They're only going to be able to buy what they can afford. And the affordability of everything is non-existent right now. And on top of that, the Federal Reserve is most likely still going to raise its interest rates even though all of this is going on, because they really don't have a choice other than to lower inflation as best they can. And they have printed a ton of money over the last 2 years. I mean, we're talking in the multi-trillions. That all contributes to inflation, which means they're going to have to do what they can as well. It might not be as aggressive as they would have liked, but they've got to do something. Meaning it's going to get harder to get a loan, like a mortgage. It's going to get harder for you to spend your money in general, which means businesses and markets like the housing market and the auto market and the stock market are going to come way down. How far down? It really just depends on how this Ukraine-Russia situation escalates. And finally, what is this going to mean for our economy and worldwide economies? Well, for the United States economy, in the short term, we're not completely affected by what's going on in Ukraine and Russia. I mean, yes, things are going to cost more and markets are going to come down. The value of the US dollar is still pretty strong, and I have a good feeling that Americans are going to continue to spend money, especially as the pandemic starts to go away. People want to get out and buy things, and I think that's a great thing for our economy, even if things cost more right now. So like I said, in the short term, I don't think it'll have massive effects on our economy, but we'll just have to wait and see. Long term though, this could essentially send us into a recession, because if this crisis continues to get worse and worse and starts affecting even more countries, well, the United States is not going to be able to ignore it. And as a country, we're going to continue to pump even more money into the neighboring countries of Ukraine and of course Ukraine itself. Inflation is super high right now, but if it kind of remains at a contained level, then everybody will kind of adjust to the new prices. But if things continue to get worse and worse, we could be facing hyperinflation in the United States, and that could send us into a full-blown recession because nobody's going to be able to buy anything. Everything is super expensive, so nobody has any extra money. Markets will fall, and so will our economy, but that's in the long term. Worldwide economies are in the same exact boat here. And for Russia specifically, well, they might be facing a lot worse of problems. Depending on what they do next, they might need to continue to print money. And the only way that that works out for them is if they're able to successfully invade and take over Ukraine and then possibly other nations. That's the only way that it works out, because if it doesn't, then they still have all of these sanctions and all of this additional money that they have printed. Their currency is basically going to be useless, which means nobody's going to want it and nobody's going to want to trade with it. So markets in Russia could eventually tank. Now, I will say as a slight caveat here, Russia's economy could be improved if China and other countries like North Korea actually start supporting them a lot more. If China actually agrees to get a lot of these resources that would normally go to the United States and the UK, for instance, and buy them instead, well, that means that Russia is still going to be getting the same amount of money. It's going to cost Russia, which means there's going to have to be some kind of, if China supports Russia even further, then that would completely tip the scale. China is kind of on the fence right now. Some Chinese officials have basically blamed the United States for the Ukraine-Russia war, but the president of China has actually urged Russia to stop and find a diplomatic solution instead. Right now, though, China's getting a ton of attention because a similar situation might happen sometime super soon between China and Taiwan. China may end up invading Taiwan and taking it over because it believes that it should be a part of its country. If that happens, then you could have another massive global shift, and the United States may have to respond aggressively, putting even more sanctions on the country. But the issue is we get a ton of resources from China. So doing that would hurt our economy even more. Now again, in the short term, it's not clear if that's going to happen. In the long term though, China and Russia continually align themselves with one another, and the United States continues to push back from those two nations and their ideologies. And of course, this entire Russia-Ukraine situation is highly complex and super complicated. There is a lot going on here, and I'll try to keep you all as updated as I possibly can with everything that goes down with the Ukraine-Russia war. But for now, I want to hear from you on this issue. What do you think about the Russia-Ukraine crisis and how it is affecting our economy, our markets, and our world right now? Do you think the whole thing is nearing its end, or do you think the Russia-Ukraine war is just starting? Whatever your thoughts are, leave a comment below before you go. That is it for today's business and financial news breakdown. Thank you so much for watching. If you want to stay up to date with all of the top business and financial news from around the country, our team puts together a free daily newsletter, and you can subscribe to it by clicking the link in this corner right here. And if video's more your thing, and you want to stay up to date with me and everything else that's happening in the business and financial world, I'm putting out updates 7 days a week on this channel, and I've actually got another one ready for you right there, so be sure to check that out before you go. That is it for me, everybody. Be kind out there, and I'll see you all in the next one.